Welcome to the Deep Dive. We're the show that really tries to cut through all the noise out there.
That's the goal.
Yeah, give you those clear, impactful insights. Our mission, really, is distilling all that complex information, hoping you get those aha moments.
A shortcut to being well-informed, basically.
Exactly, without feeling totally overwhelmed.
And this week, we are diving deep into, well, a really pivotal period in the crypto world. Specifically, July 14th to July 20th, 2025. This wasn't, just another week.
No, it felt different.
Yeah, it saw some seismic shifts.
Yeah.
Technology, finance, policy. It really set a new tone.
That's right. So for this deep dive, we've gone through, a stack of reports, analysis, trusted English sources, obviously, pulled out the top 10 blockchain and crypto stories from that specific week. And our goal isn't just like listing what happened.
Right. It's the why.
Yes. Why it fundamentally matters, what it signifies for, the bigger picture.
So get ready. We're going to cover Bitcoin's unprecedented price surge, landmark U.S. legislation stuff that's been talked about for years, major institutional moves, too, showing real confidence.
Yeah, that was striking.
And evolving regulatory clarity, especially around tokenized assets. Even some, surprising trends in altcoins.
But we also have to touch on the flip side.
Absolutely. We'll confront that crucial, kind of sobering challenge. Security concerns that just keep cropping up with rapid growth.
Okay, so let's start at the beginning of that week.
Yeah.
Chapter 1 has to be Bitcoin, right?
Definitely.
It just absolutely rocketed.
Yeah.
What was it? $123,153 on July 14th?
Yeah.
A new all-time high.
Incredible number.
It really felt like that kicked everything off, didn't it?
Yes.
It was bubbling underneath to cause such a massive surge.
It's interesting. It wasn't just one thing. It felt like this confluence of factors.
Okay.
Two main forces, really. First, you had about $3.4 billion in ETF inflows earlier in July.
Okay, so sustained interest there.
Yeah, definitely signaled investor appetite was still strong. But just as important was this huge optimism building around the U.S. legislative push.
Crypto week.
Exactly. That nickname popped up fast. It was this powerful mix, market mechanics meeting policy anticipation.
Crypto week, right? So July 14th to the 18th. The U.S. House was, it wasn't just talk, was it? They were actually moving bills.
Oh, yeah. It felt like a real legislative blitz, very focused. The House debated and, crucially, approved specific major crypto bills. Things like the Genius Act.
The stablecoin one.
That's the one. Focused on a stablecoin framework.
Okay.
Then the Clarity Act, trying to bring more, clarity to digital asset classification.
Which is always needed.
Always. And interestingly, several anti-CBDC bills, too.
Central bank digital currency.
Right. Showing a definite stance there. So all this activity together, it created this real sense of progress, and that definitely fueled market optimism.
And the Genius Act specifically that seemed to fly through Congress, surprisingly fast, wouldn't you say?
Remarkably fast.
Yeah.
Especially given, the usual pace for crypto stuff.
Right. And then, boom, July 18th, it's officially signed into law by Trump. That was a genuinely monumental moment for crypto policy.
So what's the big deal? Why was that act so significant?
Well, its significance it's profound, really. It fundamentally changes how stablecoins are viewed and how they can be used.
So,
By setting up federal regulation for the issuers, making them hold dollar-backed reserves, putting in consumer safeguards, it basically throws open the door, or at least paves the way, for more institutional money to come in comfortably. It's like a blueprint for regulating digital assets, not just stablecoins.
Legitimacy.
Exactly. It's not just about protecting consumers. It's about legitimizing a whole asset class.
Okay, so Congress is moving fast, providing clarity. And then right on the heels of that, the SEC chimed in too, didn't they?
They did, and it addressed a really important point that week.
Look who was.
Well, the question a lot of people have, how do old rules apply to these new digital things?
Right, tokenized assets.
Exactly. SEC Commissioner Hester Pierce clarified it. She basically reaffirmed that tokenized assets, like if you tokenize stocks, they're still securities, plain and simple.
So the format doesn't matter.
Doesn't matter. They fall under existing regulations, which is, a vital principle. Digitizing something doesn't magically change its regulatory nature. Key for market integrity.
That distinction definitely helps clear things up. Because, with Congress acting and the SEC clarifying, it felt like the institutional dams started to break.
They really did. We saw some major moves from big players. It was a real vote of confidence.
Like Grayscale.
Grayscale, yeah. managing around, what, $33 billion in crypto funds?
Huge amount.
Huge. They submitted confidential SEC documents for a U.S. public listing.
Wow.
That move just screams institutional belief that the policy momentum is real, and they're getting ready for, wider public access.
And it wasn't just them, right? There was something else major happening with Ethereum.
Yes, the introduction of Ether machines.
Sounds like a superhero.
Huh, maybe. It's a new blank check company, a SPAC, backed by some heavy hitters. Kraken, blockchain.com, Andrew Keys.
Okay, serious players.
Very serious. And it's set to manage over $1.5 billion in Ethereum in ETH.
$1.5 billion.
Yeah, which shows this significant shift, this growing trend towards institutions holding Ethereum directly. I mean, think back a few years.
Unthinkable.
Exactly. Institutions wouldn't touch this stuff with a 10-foot pole. Now they're setting up dedicated vehicles for it.
Okay, so the institutions are clearly jumping in.
Yeah.
But all this fast movement, legislation, market pumps, any warning signs? Was it maybe too much optimism?
That's always the question in crypto, isn't it? But look at the market reaction after the Genius Act was signed.
What happened?
Crypto-linked public companies, Coinbase, various ETH-related stocks, they rallied big time.
So a direct link?
It seemed pretty direct, yeah. That stablecoin clarity just boosted overall market confidence. It showed, a real correlation. Clear rules lead to market uplift. The immediate reaction was definitely positive. It felt pretty sustainable at the time, though, crypto is always going to be volatile.
Of course. Now, while Bitcoin was grabbing headlines and institutions were making moves, Ethereum was also doing really well on its own, wasn't it?
Absolutely. ETH had a very impressive week itself.
Where did it get to?
It climbed up to around $3,797. Maybe touching $3,800, getting close to that big $4,000 psychological level.
And what was driving ETH specifically?
Couple of things. Similar pattern in a way. Rising interest in ETH ETFs.
Mirroring the Bitcoin ETF success.
Right. And also the ongoing network upgrades, things like proto-dank sharding. Those technical improvements are really boosting confidence, both institutional and retail, especially in the DeFi space.
Decentralized finance.
Yeah, those upgrades are crucial for the new applications being built there.
Okay, so beyond the big two, Bitcoin and Ethereum, the rest of the market, the altcoins, saw some action too. Even the, let's say, more speculative end.
Oh, definitely. It wasn't just the blue chips moving. We saw tokens under $1, like Bahank, SHIB, Doji, E, gaining traction again.
The meme coins.
The meme coins, yeah. But interestingly, a newcomer called LILPEPE also made some noise.
LILPEPE, okay.
And what was kind of notable about it, surprisingly, was it tried to integrate actual utility features.
Like what?
Things like staking, letting holders earn rewards, and even DAO governance.
So the community gets to vote on the project's direction.
Exactly. Which is, kind of fascinating for something that starts out looking like just another meme token.
So even the meme corners are trying to add substance.
It seems that way.
Yeah.
It could be a sign of the market maturing a bit, or maybe just getting more creative with speculation. But yeah, this drive towards adding some kind of utility, even in unexpected places, it was interesting to see.
Okay, we've covered a lot of, frankly, very positive news. Breakthroughs, confidence, rallies.
Yeah, it was mostly upbeat.
But we have to address the elephant in the room, that ongoing challenge. Security.
Right. It's the crucial, sobering counterpoint to all the growth. You have to ask about the risks that are still very much present.
And the numbers were bad.
The numbers were startling, actually. Crypto thefts soared in the first half of 2025. Over $2.17 billion lost.
A billion.
With a B. Driven by some huge hacks like that Bybit mega heist and also the CoinDCX hack in India.
Wow.
It just highlights that even as the industry matures, gets regulated, security is still this massive paramount challenge.
Needs constant work.
Constant vigilance, constant innovation. And it raises big questions, right? Who's responsible? Exchanges, users, developers. What new defenses are actually working against these sophisticated attacks? It's an ongoing battle.
So let's try and wrap this up. To recap, that week, July 14th to 20th, 2025.
Yeah.
It really felt monumental for crypto.
It really did. A turning point, maybe?
We saw legislative breakthroughs people had waited years for, real institutional validation, not just talk, and pretty significant market moves. Bitcoin's high, ETH's climb, even the altcoin evolution.
And our goal with this deep dive was hopefully to give you the signals and all that noise.
Right.
Empower you with a clear understanding of why that period felt so pivotal. You could really see policy, institutional money, and tech evolution all coming together.
Creating new realities almost in real time.
Yeah.
So as you, the listener, think about everything we've discussed, here's maybe a final thought to chew on.
Okay.
The events of that week, they strongly suggest crypto isn't really waiting for permission anymore. It feels like it's starting to actively set the terms for its own future.
Interesting way to put it.
So what does that imply for how technology, finance, and maybe even individual sovereignty intersect moving forward? Something to ponder.